Alphabet beat on every single line and still got sold 4% because Wall Street no longer trusts CAPEX. Tesla, NVIDIA, Intel, and the whole tape are caught in the same trap. Let's get into it. Alphabet delivered a blowout quarter. Revenue that's up 24% to $119.8 billion. Google Cloud accelerating to 82% growth, EPS of $9.11, and the stock fell 4% anyway. Here's why. Management hiked 2026 CAPEX guidance to $205 billion, up from $185, and free cash flow swung negative to minus $5.9 billion. The market has one question now. Does the AI build-out ever pay off? The bear case is sharper still. Of Alphabet's 298% profit surge, roughly $99 billion was a paper mark-to-market gain on its Anthropic and SpaceX stakes, not operating income. Strip that out, and the quarter looks ordinary. The forward signal. Alphabet's reaction sets the template for every hyperscaler. If CAPEX-heavy names keep getting sold on strong revenue, the entire AI trade is repricing toward proof, not promise. Tesla posted a record, 480,000 vehicles delivered, up 25%, crushing the 407,000 expected, and beat on revenue at $28.2 billion. Then the profit line broke. GAAP operating income fell 57% to $398 million, a 1.4% margin, and adjusted EPS of 33 cents badly. Missed the 53-cent consensus. CAPEX jumped 142% to $5.79 billion, as Musk called 2026 a massive CAPEX year for Optimus, robo-taxis, and data centers. The bear case. Tesla is now an AI infrastructure spender, whose auto margins are the price of an unproven bet. Shares fell 6% pre-market. The forward signal. This is the exact same CAPEX skepticism reflex that just hit Alphabet. Watch whether robo-taxi revenue materializes by year-end. If it doesn't, margin compression becomes the story, not the bet that justifies it. The CAPEX anxiety isn't isolated to two stocks. It's the whole tape. Futures slipped across the board, with Nasdaq 100 futures down 0.4%. After Alphabet's and Tesla's raised spending outlooks crystallized the market's core worry. AI spending is unmistakably real, but the return on investment timeline is not. Compounding it, intensifying Middle East attacks pushed Brent crude toward $97 and lifted Treasury yields to their highest since May on renewed inflation fears. The bear case. You now have a CAPEX skeptical equity market and a rising rate backdrop at the same time, the two forces that punish long-duration growth hardest. The forward signal is today's calendar. Intel, T-Mobile, and Lockheed Martin all report, and the tape is trading every CAPEX line as a liability until proven otherwise. If Intel's foundry numbers disappoint after the close, expect the show-me-the-return sell-off to deepen into Thursday. Intel reports after the bell today, and the stakes are enormous. The stock is up 163% year-to-date, more than 400% over 12 months on AI chip optimism and 18A partnerships with Apple and Microsoft. The street model's roughly $14.44 billion in revenue and 22 cents adjusted EPS. But the real scrutiny is on the 18A foundry ramp. Intel guided gross margin down to about 39% from 41% as higher-cost 18A products scale. The bear case is blunt, 163% run prices in flawless execution, and options imply a 12 to 15% post-earnings swing, a brutal bar to clear. The forward signal. Prediction markets put 68% odds on foundry revenue, topping $5.5 billion. Clear that, and the external customer thesis validates. Miss it, and Intel becomes this CAPEX week's cautionary tale. Amid the CAPEX skepticism sell-off, one name is the counterweight, NVIDIA. trading near $207 and a $5 trillion market cap. The first, but still, quote, very few, H200 accelerators are now reaching approved Chinese buyers: Alibaba, Tencent, ByteDance, and ZTE. This is context more than fresh news. The export clearance was reported a week ago. But the logic matters. All that hyperscaler CAPEX, the market is punishing Alphabet and Tesla for. A large share of it lands as NVIDIA revenue. Reuters pegs Chinese customer interest at over 2 million H200 units, roughly $27,000 each. The bear case, NVIDIA's $5 trillion valuation, depends on that spending continuing exactly as the buyers are now being pressured to justify it. The forward signal, NVIDIA's roughly $91 billion Q2 guide, is the number the whole AI infrastructure narrative rests on. Confirm it, and the CAPEX fear looks overdone. The through line is unmistakable. This is the week the market stopped taking AI spending on faith. Alphabet, Tesla, Intel. Strong revenue is no longer enough because investors want the return. NVIDIA is the bet that it arrives. If the Daily Alpha helps you read the tape, subscribe. I'm the Daily Alpha.